Hey everyone, as many of you have likely picked up in my past videos, I've been a proponent of the strong stimulus action taken by the Fed, Congress, and both presidents. As we come out of the pandemic recession, we're starting to see lots of green shoots and growth forecasts that are off the charts. But have we overdone it? Besides the great economic outlook news, we're starting to see new headwinds emerge. Could we have overstimulated the economy? Retail sales have jumped. They're about 15% above pre-recession levels. But all that consumption is starting to stir inflation, especially gas, food, and building materials. And companies are beginning to report labor shortages and wage inflation. How's that even possible? A year ago in April, the number of unemployed people skyrocketed to more than 23 million. Just 2 months prior, before the pandemic, only 5.7 million Americans were unemployed. Since April last year, we've come a long ways, and now just 9.8 million are unemployed. But there should still be some slack in the job market. We shouldn't be hitting labor shortages yet. This may shock you, but job openings are at an all-time high. There are over 8.1 million positions open as of March, the most recent published number. The previous peak in job openings was 7.6 million in November of 2018, when the labor market was airtight. The catch is that the stimulus package includes federal unemployment benefits of $300 per week. That federal compensation is on top of any state-level benefits an unemployed person may be receiving. This appears to be a disincentive for some people to work. As retailers, restaurants, and hotels try to reopen and get business rolling again, many are scrambling to hire enough workers. Because the expanded unemployment benefits carry through September 6th, some businesses fear they won't be able to staff up for the summer. To battle this issue, 3 states have already announced plans to cancel the federal unemployment benefits, and more will likely follow as local governments struggle with the labor shortage. So what's this mean? First, all things considered, this is a good problem to have. If you think back to the slow, plodding employment recovery after the global financial crisis, it took about 5 years to get employment back to pre-recession levels. Even with the expanded unemployment benefits, it looks like we might be able to get back to pre-recession levels in 2 years this time. With regard to the question of whether we overstimulated the economy, well, maybe we did. But again, that's probably a lot better than understimulating it and waiting years for a recovery. But the Fed, Congress, and the President will probably need to ease off the throttle a little bit so the situation doesn't spiral out of control. From a real estate standpoint, these problems present less of a challenge. Having plentiful job openings and a little wage inflation is generally good for most types of real estate. Unfortunately, the sectors negatively impacted are also the ones that have been hardest hit by the pandemic, hotels and retail. But even with the staffing headwinds, retail and hotels are ultimately better off with a fast recovery than a slow one. The staff shortages will likely be a transitory issue, ultimately settled by the fall when the expanded unemployment benefits run out, if not sooner. So yes, we are facing some symptoms of overstimulating the economy, but that's better than the alternative, and it shouldn't be a problem for commercial real estate. In the longer term perspective, a fast recovery pays dividends for all types of commercial real estate. A positive trend for investors who keep their eyes on the horizon.